and president of Old Mutual Asset Management, and Doug Butler, portfolio manager at Rockland Trust. Gentlemen, thanks a lot for being with us. Peter, let's start with you. $200 billion over 10 years from the federal government. That's what we're hearing. Leveraged maybe with some private partnerships into $1 trillion over 10 years. Is that really enough to go around for investors to get excited about?
You know, it's funny to talk about 200 billion as a small number, but the reality is it is a small number. And the infrastructure piece is interesting because you got a couple of different components of infrastructure. I think this administration thinks about infrastructure in the crumbling infrastructure kind of buzzword phrase, which really is the backward-looking infrastructure. It's bridges, it's tunnels, it's transportation infrastructure. That's essentially brick-and-mortar historical. It's important, but I think from a true institutional investor perspective, I'm more interested in forward-looking infrastructure. I think the question about what the electronic grid's going to look like, what alternative energy infrastructure is going to be important. And I think investors are more interested in that direction. And the last thing I'll add, Michael and Kelly, is unfortunately, infrastructure is one of the principal areas where economic investment necessarily intertwines with governmental policy and politics. And that always creates risky outcomes for genuine investors. And I'm worried about the atmosphere in Washington. I think we all feel we're disappointed by the partisanship. I worry about any good economic outcomes coming out of the budget argument over infrastructure.
And you're the optimistic guy. Doug, why are you more bearish about infrastructure in general?
Right. Well, it's interesting. I certainly feel similarly to Peter in terms of what the benefits of infrastructure are, but where we are very concerned is we're concerned that, you know, the Flynn, Comey, Russia debacle has really pushed infrastructure into the back of the pack. So it's behind tax reform, it's behind trade cuts, it's behind health care. And we really don't see much bipartisan efforts, even though spending money is something that generally congressmen and women from both parties can agree on.
Peter, I guess even if perhaps it's not some huge fiscal push out of Washington of new money into this area, what does it say about the fact that we actually somehow have to find a way to build more stuff anyway, and maybe cyclically, you know, commercial construction looks pretty strong. Are there parts of this sector that seem like they might be attractive on their own merits?
Well, there are, and I think what will end up happening, I agree with Doug on the collapse of partisanship in Washington. If the public policy component of infrastructure investment fails, and my gut is it will, I believe that to the extent there are genuinely economic opportunities available on projects, the private sector will take care of it. Investment will find its way to solid returns where there's a demand, and there is a demand for infrastructural redevelopment and reconstruction on the brick and mortar side. And I also believe there'll be genuine opportunities for innovation on the forward-looking infrastructure, on the electronic grid, on alternative energy, on a number of things that actually some of our managers in the illiquid space within the OMAM family, especially in the secondary equity markets, are looking at real assets and energy. And I think there will be opportunities there. We're just not going to wait around for the government to quit arguing with itself about it.
Well, that sounds good for everybody. Peter Bain and Doug Butler.
I hope so.
Thank you both for joining us. We look forward to the fruits of your efforts there, Peter.
Right.
And when we come back, we're going to have the closing countdown for you.
And then when we flip to the after the bell discussion, Larry Kudlow on what he thinks is destroying the wealthiest state in the country, at least for now.